All right, well, I know the Bacon Brigade is in here. What's up, Bacon? Let me know if you can hear me. All right, so we're going to cut the music. Do. All right. Yeah. So honestly, that's the main reason why I do this. Everyone seems to really love the commentary that I give on the questions. You know, like the stupid questions that they ask. Some of them are stupid, some of them not so much. But just real quick, as a test before we go, I want to make sure that audio comes through from the web browser. So just give me a second here. Okay, so let me know if you can hear that. If you guys can hear that music, then everything works. Okay, cool. Awesome. Okay. That means browser audio is working, my mic is working, everything is good. And we should be good to go. So let me switch my thing over here. There we go. So so far, stocks today have been absolutely just pumping like crazy. Just like really everything. Got Bitcoin up here. Obviously, the dollar has been kind of tanking. Bitcoin's just been kind of going sideways, but everything else for the most part, FANG has been ripping. S&P has been ripping. If we go over here, let's look at the US 30. US 30 is kind of retracing now. But for the most part today, everything has been pretty much going up. So I'm not too sure if it's going to be the kind of thing where we see, just some kind of a dump or whatever. I know that the announcement, I think it comes out like now or very, very shortly here about what's actually going to be happening with the rates. I'm also going to bring up a couple other things. So there's a couple things that I've been looking at in terms of liquidity. So I'm going to refresh these real quick. Do 7-day look back period. So there's a lot of liquidity above us here, right at about 27K or so. And that's on the 7-day look back. If we look at the 12-hour, what do we got? Zoom in here. Yeah, so it's probably going to be the typical kind of scenario where we get like a big wick, like in both directions, to sweep this liquidity. There's one pool above us at like 26.1, and then again at 26.4 or whatever, and then that last batch of liquidity is way up there at 27K. So normally I like to just have a look at the the 7-day look back period or whatever. But Yeah, it looks like 27K might be the move here. It's looking like Federal Reserve doesn't even have the live stream up. Normally they put the live stream up like after they make the announcement and stuff. So I will rearrange my screen after that. I've got like a million things up on my screen. So you're probably going to see me moving stuff around quite a bit here. But anyway, that's pretty much what we got. I honestly, I really don't know if it's going to be the kind of thing where they decide to pause today, or if it's going to be the kind of thing where they decide to do a like a another 25 basis point hike. Personally, I feel like they probably should do another 25 basis point hike and then pause. Like in July or whatever. That's kind of like my, I mean, obviously, I mean, markets in general for this entire year have pretty much been going up. Now, obviously, there's some patterns forming on the higher time frames, like wedges and stuff on certain indices and asset classes and stuff like that. But for the most part, in general, even like Bitcoin, like for the last year, if you come up to a daily chart here, right, for the last year, I mean, that's all up. So we'll go over this just a little bit. I'm going to turn it down to a 4-hour chart and just kind of zoom in here. We're still kind of stuck in this channel. So this can honestly go either way. I think today is going to be like the make it and break it point for this. This May low 25.8 is very, very important. So, the fact that we're regaining that is really good. We've had like 3 or 4 closes or whatever above that now. On the daily chart, man, I really don't like how these candles are forming on this daily chart here. Very, very little and very, very choppy price action in here on the daily chart. I'll actually make these a different color so that you guys can actually see that. But yeah, just very, very small bear flag here. I think that today this either gets validated or it gets invalidated. But in general, it's been really choppy. This has been the main level that I'm looking at. But in terms of a reclaim for bullish momentum, we really need to be reclaiming this level up here at about 26.5. So that's kind of going to be the main level that I'm going to be watching for. So there's some other things going on too. Let me get this out of here. Let's see. I don't want to have all of this stuff on the screen. Venom Algo currently is in a just tiny drawdown, like less than 0.5%. It's currently holding short from about 25.6 or so, while the price action just kind of like chops around sideways. So I'm not going to take a look at that stuff like in depth today, but it'll be cool to kind of see how the price action and how the algo kind of reacts, to the price action and the volatility today. I'm hoping that it's going to be an exciting stream. I'm hoping that it's not, just like a nothing burger. Nothing burgers kind of suck. I'm expecting, or at least I want to see, some kind of nice price action here. I moved the microphone away a little bit because I am eating lunch while we're waiting for all these announcements, because I'm probably going to be streaming for close to 3 hours. However long it takes. So, once we get through it and we see the volatility and stuff, that's probably when I'll cut the stream. But for now, at least, I wanted to start it early. So hopefully, we can catch some volatility, observe the volatility, kind of give it a definition of like why it's happening and stuff like that. Obviously, go over the actual rate hike itself. So I'm just kind of keeping a Twitter feed open here on another part of my screen. Actually, you know what? I could probably open the economic calendar, and this site normally tells us. So the consensus is 5.25, and previous it was 5.25. So basically the consensus is that they pause today. That's probably going to give all markets across the board like a lot of bullishness. or at least that would be my guess. Kind of like what we're seeing now. Really nice big bullish candle here. I don't really want to keep it on the 1 minute chart just because it's just too small of a time frame for me. Usually I like to leave it on the 15 minute and just kind of observe the price action, but I'll probably be switching back and forth between the 5 and the 15 minute chart today. And I also want to finish the majority of my lunch before they start talking and doing their stuff. So welcome everybody to the stream. I think there's like 4 or 5 people, maybe 6 people or whatever in here yet. Hasn't really started yet, but welcome everybody. If you're new here, help me out. Push the like and the subscribe button. Help me out. Retweet the announcement of the live stream. We'll try and get a little party in here. I've been working out like crazy, and today is carb day, so I'm eating a chicken pasta salad for lunch. Got to get rid of the beer gut, guys. I was already getting, I already got a couple DMs from other people that are watching elsewhere. It's like, oh man, what happened to the beard? It's like, what happened to the beard? I mean, dude, it's summertime, man. I had to cut that thing off and let it regrow. It's just too much. It gets too hot during the summer. I just can't do it all. Normally I cut it off in like May or June, and then I just let it regrow for like the entire year. So that's the reason for the lack of beard. I have no proof of beard today. It's like tiny beard. When I shaved it all off, oh my God. My wife originally was like, oh man, I'm not really too big a fan of the beard. And my daughter was always playing with it. And then I shaved it all off because it like completely clean shaven. I haven't done that in years. Oh my God. And they both hated it. They were like, please grow the beard back. So I let it grow for like, I don't know, like I think this is like 2 or 3 weeks or whatever. And then I like trimmed it up and like gave it some lines or whatever. And now I'm just going to let the whole thing grow in from here for like another 2 months until I like trim it again. But yeah, again, if you guys are new here, appreciate it. We're going to be here for quite some time. I know that the announcement of the actual rate is going to be coming before the actual stream that they do. Like with his written testimony of like, his little written speech or whatever. And then the actual press conference where, they answer questions and stuff from the media. So that's kind of what I'm looking for here. So I'm reading online that there's like a 97% probability of a pause. But this is from an account that's kind of a troll. So, I mean, while that's possible, I don't know. I personally, I want them to continue raising rates. I don't think that there's enough pressure on the economy yet. For the most part, people are still doing just fine. With, I guess the unemployment, like ticked up just a little bit. I think it went up like 0.2% or something. It went up from like 3.6 to 3.8%. And everybody was like, oh my God, the unemployment. And it's like, dude, like a normal unemployment rate in this country is like, between 5 and 6% or so, like that's like kind of like an average. That's like the mean of what it's always been. So for, raising rates this much for this long, and then the unemployment rate for the most part still hasn't really budged, is kind of like, wow. And that's the reason why I personally think that they're going to keep raising rates. That and the core CPI, it's really not budging. I mean, like everyone's like, oh yeah, look, the inflation is going down. And you're talking about like 0.1 or 0.1 or 0.2%. And it's like year over year, that's fucking nothing. Like that's not a lot. Oh, they're definitely going to pause today because core CPI came down by 0.2%. It's like, dude, 0.2% year over year is like terrible. Like that number needs to come way, way, way down. And that's why, everybody was complaining, oh, I don't understand how they're saying that inflation is lower, food and gas and all this stuff is super expensive, and housing. Well, when you look at core CPI, it doesn't include food and housing. So since they specifically take those numbers out from that statistic, in my opinion, the data is pretty skewed. Housing and food, I mean, like for the average Joe is very, very expensive. So I don't know. We'll have to see what happens. If you guys see what the actual announcement is before me, let me know. But I'm scanning everywhere I know that I can get the number, and I have not seen it yet. So I'm assuming that it's the number's probably going to come out officially either now or in the next 20 minutes or so. But we are getting a dump, so I'm assuming maybe that number already came out and they're deciding to raise. Not sure. We just got a nice bump down in price here. Maybe my Venom algo short is in profit. I forgot where I said it was short from. Ooh. Yeah, it's like slightly in profit now. That's cool. I'm trying not to switch back and forth to that layout too often because I don't want to give too much shit away on the algo. But I noticed a lot of other people that have algos on Astrobit, a lot of them turn them off for these kinds of volatile events. I never mess with it at all. I literally just leave it there and just let it do its thing. So I'm normally not in the habit of touching it. I like to just leave it alone, let it do its thing. It thrives off volatility, so I just kind of, let it play the volatility. I would love to see more downside here. I think if we switch over to here, yeah, it looks like most stocks and stuff are starting to wane. The dollar's starting to come up a little bit. That might be also part of the reason, but that's not very much at all. Dow Jones coming down. FANG is stagnant. Let's switch from the FANG to the US 30. Yeah, the US 30 is just nuking. So basically it pulled a full retrace. I don't know if Austin is in here, but I know Austin trades the, wait, that's not, oh, okay, yeah. I know Austin trades the US 30 a lot. And it looks like, hopefully he exited that long because it looks like this pretty much did a full retrace after this pump. It went right back to where they opened. So hopefully they got out of those positions. Man, there's been a lot of drama on Twitter lately. Have you guys noticed that? There's been a ton of drama on Twitter. Even with me, normally I don't engage in a lot of the drama, and there's just tons and tons of drama on Facebook and on Twitter lately? Like just in terms of like crypto Twitter in general? Been a ton of drama. All right, so I still have not personally seen the number come out yet. I mean, it doesn't matter, I guess, like as exactly like when the number comes out, just as long as we know what it is. Who's James Pelton? One candle straight to 23K? Hell no. That would be brutal as shit. Oh my God. Man, Mick Shipperson in the chat, he like woke up and chose violence this morning. Jesus Christ. One candle straight to 23K. Like, holy crap. That's insane. That, no joke, would be some like very, very serious price action. You know what? It's kind of until the press conference goes live, I'm going to leave music on in the background. Just so that there's like no awkward pauses, like when I move aside to like take a bite of my lunch. Hope that's okay with you guys. If it's too loud, let me know in the chat. I can like adjust the volume if it's too loud or too quiet. James Pelton is one of the big YouTube influencers that always promotes scams and says he's a man of God. Oh my God. Buy Facebook Harry Potter Shiba Inu moon coin. I'm a man of God. It's going to the moon. We're going to the moon. Oh my God, what a joke. So basically he's like another So basically he's like another BitBoy or something. It sounds like he's like another BitBoy or something. He's just like promoting scams. He's like, I'm doing this for you guys. Actually, I think I have the meme somewhere. Oh man, I hope I can find it. It was so funny. I'll play it for you guys later. I don't want to mess around with like my audio settings and stuff. James Pelton was once quoted as saying, I don't want the truth, I just want my money. Oh my gosh. What a scumbag, man. Like, I never understood, like... I never understood why people do that. It's like the crypto people. Like, they get endorsed by these companies and they're bullshit companies. And like, you know that these big YouTubers that are making millions of dollars off YouTube, you know that they're doing or have a team that's doing research on these projects. They know that they're scams ahead of time. Like, how can you not know that you're promoting a rug that's by some shady dev and it's like, oh yeah, it's this new project. It's going to be this, it's going to be the new thing. It's this new meme coin, right? And like the account that made the token or whatever has like 1,000 followers. It's like just from that, it's like, you know that it's going to be a rug, right? You know it's going to be a rug ahead of time. And then they take the money because they're greedy as shit. And then they dump it on all of the people that like either pay for their content or trust their content, or it's just super irresponsible, man. It's such a scummy thing to do. Like all of those people that are like humongous, massive like Twitter influencers that promote all of these scam coins, like Wendy and BitBoy and like all those people or whatever. I guess James Pelton, you know, like does it for like penny stocks and cryptos and stuff too. It's like, man, like such scumbags. Those people are the reason why I never go to conferences anymore, because like I physically cannot stand those people. So if I go to like a crypto conference with like a media pass, I'm like forced to be around all of the people that are in the space that are just absolute 100% shills and LARPs. And I'm forced to be around them. And it's just like, man, it's like, I just want to punch some of them in the face. So like, I don't even bother wasting my money going to the conferences anymore, because it's just a bunch of fucking LARPs. Like normally the only thing that makes it worth it to go to those conferences is one, the parties, because the majority of the crowd is younger. So like the parties is like the main thing. And then like the keynote speakers, you know what I mean? So like if Jack Dorsey is going, or if Michael Saylor is going, or if Cynthia Loomis, the senator from Wyoming, is going, like seeing those and then going to the parties, that's like it. But most of those big keynote speeches are on like the Thursday or Friday. They're on like either industry day or on the Friday. And then that's it. And then the parties don't happen until like Saturday. So I don't know, man. Like even if you like want a media pass to go, it's like, oh yeah, sure. Or worse, what I heard that's happening, like if you guys are familiar with Aubrey Strobel, she went on a rant on this on her podcast and was like, that's bullshit. Like all of these conferences are making tens of millions of dollars. I mean, like one booth is like $100K for the weekend, right? Like, you know that they're making like mad money. And all the speakers that they invite to the actual conference, they'll like let them in for free or whatever because they're speaking, but like they don't comp their hotels, they don't comp any of their food, they don't pay for any of their transportation, like the flights or anything. And it's like the influencers that show up as media or whatever still have to pay for all of that stuff. And like, it's not cheap. Like if you guys travel or want to travel, like I want to travel, and I refuse to spend $5,000 for round trip tickets for my family to go somewhere. Like, it's just too much. Like, I'm just not going to do that. Like $5,000 is just like a ridiculous amount for 3 airline tickets round trip. Like, and that's not even like going somewhere international. That's like staying domestic. Like if I wanted to fly from Kansas City and like go see family in Arizona, or go visit friends in Virginia or something like that, it's like $5,000 round trip, no matter where I want to go. Even flying from here to Texas, which is only like a 12-hour drive for me. It's like 10 or 12 hours. Plane tickets, if I wanted to be like, fuck it, I don't feel like driving, let's just hop on a plane and go. Yeah, no way. It's like $3,000, $4,000, $5,000 for round trip tickets. And that's an economy. That's like not even business class. Like it's just crazy. Never understood that. All right, let's check again. Did these numbers come out? Did they decide to pause? Did they decide to raise? What's going on here? Give me some news. Uh-oh, did Twitter break? Or did I break Twitter? Oh, another thing that I kind of want to put on blast today while I'm kind of like on the whole rant status. Give me a second here. There's been a lot of people on Twitter that have been promoting, or, well, not really promoting, but they've been making posts showing like Binance, like on the Binance exchange, like Bitcoin USDT, and then like the Binance token versus like Bitcoin and USDT, and showing like the cumulative volume delta, and accusing Binance of like manipulating the market. And oh my God, look, they're just like selling into all of the volatility and just offloading all their coins and stuff. Now, while that may be true, unless you can physically prove that with on-chain data, that is a very, very irresponsible speculation to make. Like, I mean, you're talking a speculation that could have like, you know, federal charges attached to it. And I really don't like the people that have been feeding into the idea and like promoting that kind of FUD on Twitter, because one, it's irresponsible. unless you've actually done your on-chain research. And two, you know, making accusations like that and just swinging accusations like that around to somebody like you know, CZ is, man, I mean, whew, that's pretty ballsy. Like, I don't know why so many people have been doing that, but lately I've been seeing a lot of people coming out with, oh yeah, look, I've got a new chart. And then they show like the cumulative volume delta on like BNB going up as you know, like the price is going down, and then insinuate that, oh, it's CZ offloading all of his BNB. And that could be true. Like, I'm not going to say it's true or it's false, but without having the actual facts and the on-chain data to back up that claim, you shouldn't just be making that assumption. And these are people that have like hundreds of thousands of followers, like 100K followers, 200K followers. It's just an irresponsible thing to do, you know, just like, you know, the big YouTube personalities that like promote, you know, like known scams and shit like that. Like people that their viewers, even for the most part, know that a lot of the things that they're promoting is scams. It's just super irresponsible. Like, there's just so much FUD, and there's so many people that purposely mislead people in the space. I really don't like that. It's not a cool thing to do. Do. Gainsey is trying to troll everybody. He's like, how to put this? Banks failed, dollar is wrecked, perfect use case for Bitcoin has played out, and it underperformed half of the stock market in the last 5 years, and basically the entire stock market during the window which it was supposed to turbo thrive. And you're bullish. The very first response was bottom tweet. Which could be true. That might be a thing. Do you think Litecoin has already topped prior to its August 2023 halving? Yes, probably. It's already over. Litecoin's run is already done. It's already over. Take a look at this liquidity heat map real quick. Just kind of give this boy a little refresh. Yeah, see, it looks like the price action like really wants to kind of trickle down into these longs that are below us. There's like a little pool of 100x longs below us. If the bears really keep it up, I mean, there's tons of 150x longs down until about what, like 25.2-ish. So that's going to be interesting today. I'm just really hoping that it's not a nothing burger, right? I mean, I really don't want it to be a nothing burger. That would not be awesome. Yeah, so they're probably going to release the number here in like maybe 20-30 minutes, and then we'll know. Give me 1 second. So far, the price action has just been a big nothing burger. I don't know. What do you guys think? I know that you guys are watching. I know that you guys are in the chat. So what are your thoughts? You think the economy hasn't seen enough pain yet and they need to keep raising rates? I personally do. Most people forget that. That's why I watch the FANG so closely here. I'll just switch to it on my main screen. So the FANG is an index. Oh, I got blown. This short worked. This short I got blown out of, and I haven't re-entered since. But in general, I wonder if can I hide these? Yeah, let's take them off the minute chart. falling wedge worked out. But if you look at this on a, it's just straight up. For the whole year, literally since the very beginning of the year, like January was the bottom. Like the beginning of January was the bottom, and this went straight up. So for those of you guys that don't know, the FANG index is basically an index of like basically the $1 trillion club stocks, right? So like, you know, your Google, your AMD, your Intel, your Nvidia, your Facebook, your Alibaba. It's like 5 or 10 stocks that are like in the $1 trillion club, and it's just big tech, right? So it's the FANG index, and it's just been on an absolute monstrous tear for the entire year. So I mean, if you really zoom out here and you look at the weekly chart, right? I mean, like, look at it. 1, 2, 3, 4. 1, 2, 3, 4, 5, 6, 7. This is going to be 2 months in a row of not a single red candle on the weekly chart. Like that's insane. That is really, really crazy. I mean, just in January, like the whole month was just like insane. Like had a little bull flag and then it just whoop off to the races. I mean, this thing has just been absolutely tearing. Look how overbought this thing is. So this is when I start getting interested in shorts on like big tech and stuff, is when you start seeing like up only price action like that, and you start getting multiple divergences on different indicators, and you start seeing the bullish volume start tapering off. That normally means that you're approaching a top. Obviously, I wouldn't attempt to short this again until I have some kind of confirmation. Like on the daily chart, my first confirmation would be like, okay, I want to see these lows break, and then, you know, a retest between you know, like here and up here or something. And like, you know, like, okay, like we broke these, like we see something like this, right? Like that would be your short entry. And then you'd have a stop above the highs. You've got a really good RR. This would be a first take profit. Either here or here would be a second take profit. So, you know, like just playing the price action, basically. Like normally you can play price action very, very simply on like if you're trading indices on either ETFs or futures or CFDs, or some places offer this on cash. I think on CME they offer futures and cash on this. I don't know as if there's a FANG ETF. I'd have to look into that. I'm not 100% sure on that. Don't quote me. Or maybe some brokerages have it and some brokerages don't, but what's natural gas been doing? Grinding sideways. Man, this is looking so accumulative right here. A little bit of hidden bullish divergence here on the MACD. Nothing crazy. This was a flat bottom. Yeah, this is looking like super accumulative to me on natural gas. Yeah, flat bottoms, lower low. Actually, it was a little bit of divergence here on the volume as well. Natural gas is something I've been watching very, 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 very closely. Been watching this very, very closely. This is like a long-term play for me. I'm trying to average in like around, you know, between like 2 and 230 in this box, basically. Okay, so 2 to 226 or 226. That's kind of where I'm trying to average in on this for like a long-term play. When I say a long-term play, I mean like seasonal. Imagine if Big Boy Powell comes out and he's like, we're gonna hike rates by 50 basis points. Oh my God, I would die laughing. That would absolutely just obliterate all of the bulltards. Oh my God, it would be hilarious. That would be really, really funny. What's the dollar doing? The dollar is just tanking right here. So we're getting close to invalidating the cup and handle here. If we get 2 closes on the daily below this line, that's going to be it for the cup and handle. So if you guys tune into my streams on the weekend, you guys know that for the longest time, I have been watching this Adam and Eve okay, try to play out. And I was like, well, you know, we've got our orthodox tops, which is really here. So technically that's a cup and handle. But if the handle retraces more than 50% of this move, so like from here to, I'll just draw it with a fib. Hold up. Let's get rid of that. So like from the trough of the cup to like the high of the other side, if you close below 50%, like with 2 candles, like a 50% retracement, it invalidates the cup and handle. So, I mean, I've been watching this for literally weeks now, form this massive Adam and Eve pattern. It's been really, really interesting. So I'm very, very excited to see what ends up happening with this. Yeah, that would be the biggest troll ever if Powell was just like, yeah, we're just gonna do 50 basis points today. Fuck it. That would be so funny. I'm gonna like probably crush the majority of my lunch like while he's making his speech. I'm not seeing any confirmation anywhere on if they're hiking or pausing today. If they do decide to pause, man, these I just can't get over. Let's change the visibility of this. Take it off hours. Like, I can't get over how garbage this price action is on Bitcoin. Like, this just looks like such trash here. Like, it's really, really bad. Can't go up, can't go down. It's just really, really stagnant. I mean, the actual opens and closes of these candles are literally in like a less than a $200 range. I mean, that's insane. There we go. Ugh. Yeah, that's like a super well-defined channel too. I really like this channel. Really, really well-defined, clear tops, clear bottoms, tons of touches here. I mean, this is definitely a very valid channel. I did a short video. If you're new to the channel, make sure you like and subscribe. I do those twice a week. The newest one should be on the homepage of my channel. You guys can watch that later or whatever, but a measured move on this. Literally 25K. And I've been talking about 25K for a long time. Everybody's been talking about 25K. If there's more downside, it's going to be 25K, mostly because it's such a psychological level, right? It's just a really, really big psychological level. Yeah, I'm not seeing the articles of their announcement on the Federal Reserve's website right now either. Yeah, I don't got anything here. Not yet. It's probably coming soon though, because they just posted the press conference thing. It's live now. I'm not gonna play this because last time I did, my entire like YouTube basically threatened to demonetize me because apparently their music while they're while they're waiting is like copyrighted or something, and I got yelled at. Let's see. Super sad how it basically didn't react at all. Do you think a pause would even change anything? In my opinion, no, because inflation, from what I can see, is still running pretty hot over like a long period of time. Excuse me. Inflation's still running hot, like for the long term. So like, even if they pause today, they could just like come back in July or August and be like, yeah, we're going to hike again. So no, a pause today, in my opinion, probably wouldn't mean too much in the long run, just because inflation long term is just running incredibly hot right now. Or did Bitcoin front run the pause over the last few months? No, it wouldn't have gotten front run that far in advance. There's no way. Normally, if something is going to get front ran, like a big event like this, with so much indecisiveness, normally it'll just be over a span of a week or two, not multiple months. That's too far in advance. And that goes for all markets, not just like Bitcoin. The meeting starts 17 minutes. Do they publish the data before? No, I don't think they do publish the data before. I've been keeping my eyes on their website, as well as other like news streaming services that I use over here on like another part of my screen. I like to use this one. It's called FX Street. It's free. You guys can use it. So this is saying on FX Street, it's saying 15 minutes for the numbers. So I think Odin is correct that, yeah, it's probably going to be like 10 or 15 minutes. They'll publish the numbers. They finish up their meeting. Jerome Powell gets over to, the interview room or whatever after they're done having their actual meeting. Normally I do trade these. I just have not been trading like very much for the last 2 months. I've had a lot going on, just personal. I'm also starting school. Well, not starting school. I'm studying for certs that I'm getting. So my main focus has primarily just been on Bitcoin and just scalping it here and there. And I haven't really been trading very much. I mean, I've been shifting around and, rebalancing my IRA and stuff like that. Just soaking up all of the awesome, interest that the for the yields, you know what I mean? Like these 3 months and 6 months, I mean, like you can't really shake a stick at 5.25% and over 5.25%, right? Like look at this on a weekly chart. And it's just like, it's been literally up only. Like it's just literally a straight line up, So it's kind of waning now, but in general, I think that this is probably going to end up continuing here. But yeah, I mean, this popped all the way up to over 6.25%. I mean, that's just insane. So I've just been pretty much rotating like my actual money, like not the money that I have in crypto. That's like a separate part of my portfolio. And for the most part, it's pretty small. Most of my portfolio is in my brokerage and my IRA account. And I pretty much do most of my trading with those. Literally this entire year, I've just been soaking up bond yield, getting those coupons and just, rolling over isn't the right word. That's what you do with a 401k or an IRA or whatever when you roll it over. But basically just compounding, I guess would be the right word, is just compounding all of those profits. It's like, oh, okay, cool. I made 6% on this much money of my portfolio in this bond. Okay, cool. And just like let it compound and do its thing and go another 3 or 6 months or whatever the bond term is for. So that's pretty much what I've been doing. I think this year I've almost, I don't know, maybe gone up 15 or 20% gains so far this year on my IRA, just soaking up bond yield. Isn't the 5% from the bond running behind inflation? Or is that adjusted after inflation? So that's going to depend on the contracts that you get. Plus, you also have to realize that there's different kinds, right? So like there's treasury notes and there's treasury bonds. They're two different kinds of things. They work differently. It would be an entire YouTube video for me to go in and like explain the differences of those in details. But if you bring up Investopedia real quick and just search for that. I'm sure that it has like a quick explanation of like what the differences are. But normally, I mean, in my experience, they're normally not like forward looking. Like they're not, like adjusted or whatever. I don't know. I really just look for the highest coupons and then just keep compounding them, to be honest with you. Like if I find a coupon for a 3 or a 6 month, treasury bond or whatever, and it's like, oh yeah, it's 5.5% or 6% or something, like, yeah, you bet your ass for a short term. Yeah, I'm doing that. 100%. Put like half the portfolio in it. That's what I've been doing. I've been literally just rolling over or compounding half of my IRA in bonds over and over and over. So it's actually, that's actually a good point, is the bond terms I look for are between, I usually do like the short-term ones, like 1 year and under. So like 1 year, 6 months, 3 months. But what happens is that yield that is advertised for that product, it's calculated in like APY, right? So like yearly. So like if you find one that's like, okay, it's 6% or whatever, you're not making 6% off of your total sum that you put in there in 3 months. Like or 6 months or whatever. That's not how it works. It would be basically like, okay, if you buy one that's like you got a coupon for one that's like 6%, and then you put, a large portion of your portfolio in it, whatever amount that you put into that bond for 6 months, that's you're gonna get like half of that, because that's calculated on the APY, right? But I mean, it's still good. It's just like, I already get dividends from my money just sitting in my IRA account anyway. So I've been soaking up the 4 3/4, almost 5% on that, and then the rest of it I've been putting into bonds and just roll over, and just compounding the shit out of them. I mean, it's been working pretty well. I mean, for the most part, I've largely just been sitting in cash. I want to see what happens after this meeting, and just kind of, I'm probably going to start making moves like closer to the end of this year, like probably closer to the end of this quarter. Like we're halfway through the year. I want to see how halfway through the year went. I'll do some like hardcore macro analysis on my own, and then really start looking at is like, okay, are semiconductors going to keep going up? Are they starting to get overheated and overvalued? Like if I do decide to go in on it, how much exposure do I want to have? Just to semiconductors or tech in general, it's like, okay, do I need to reallocate how much I have in renewables? Do I want to switch to more fossil fuels and commodities and kind of rebalance that? And I normally do that like every 6 months or so, and just kind of do like a nice rebalancing, of how I want to be positioned based on where I think that the sectors that I'm diversified in are going to be going, right? I don't do very much real estate or like stuff like that. But like commodities and like sectors, like ETFs and stuff is what I like. I like mutual funds and ETFs and stuff. That's normally where I stay. That and like bonds, some equities, and then like, CFDs or mutual funds and stuff, because it's like a basket of a whole bunch of things. 90% of it is research. I will tell you that. Like 90% of it is boring as hell. Like you have to just like read all the prospectuses of like the ETFs. Like, okay, how are they weighted? I want an ETF for this kind of sector. Okay, well, which stocks is that ETF have on it, and how is that ETF diversified? And like you have to figure all of that stuff out. There's quite a bit that goes into it. This is why most people hire accountants for it. But it's a really invaluable skill. Like if you know how to decipher and read and understand what the information is, then you can largely do it yourself. And and not have to pay extra money to like an accountant or like some kind of a managed fund or something like that. Managed funds suck. I don't want to pay anybody any money to do stuff that I can just do a little research on and do myself, you know? This price action makes this channel look huge, but on the 1 hour chart, it's like a really tiny, it's like a really tiny channel. So far, this price action is just some duty. Like, I mean, here's my thing. Like, if I deleted this channel off the screen and I just showed you this price action with no indicators, you'd be like, well, fuck that. I'm not trading that. Well, if you extrapolate this and you really look at the current price action that's been taking place for, you know, the better part of basically a week now, with like this crazy chop in here and then just sideways and flat for the last 3-4 days. If it's not moving, then why trade it? You know, like move your money somewhere else and do something different. I know Forex markets have been popping like crazy. Boom. Pound dollar? Woo! Like, that's insane. Yeah, that's like that's a pretty insane trade. There's a very good chance that this could be a trend reversal here too. Basically, if you just took this and drew like a massive trend line here, right? That's pretty much what you're looking at. And all of this is bullish now. So this probably is the beginning of a trend reversal. So like on a weekly time frame, you know, you'd be expecting a test of these highs, a retest of the trend line, and then some kind of a break, something like this. Okay. That's what I'd be expecting, like, you know, into, you know, the better part of like, you know, the beginning of next year. But most people don't trade on weekly timeframes or leave those positions open that long. So if you're trading on a daily time frame instead, this was the accumulative area, and now you just broke out from this and had a solid retest. So like accumulating in here was the spot. What would a small hike do with Bitcoin? Probably nothing. If it's a small hike or a pause, honestly, like I'm kind of feeling like maybe it's kind of a nothing burger today, which kind of sucks because every single time for this year, those of you guys that have known me and that tune into these streams on the regular, you guys know that like for the better part of a year and a half that I've been doing these and trading the FOMCs live. I'm not trading it live today, but I don't think I traded the last one live either. But before this one and the last one, every other FOMC meeting for the last like year or two, I've scalped live and I've been like massively successful. Like FOMC days and scalping on that volatility on Bitcoin was like the majority of the money that I would make. Like in one day, I would make the majority of my money for the entire month on that one 15-minute thing. It was pretty ridiculous. Yeah, everybody and their mother is expecting a pause. But last time, everybody and their mother was expecting a 25 hike, and we got it. So FOMC trading drip, that's funny. Should be getting these numbers any minute now. Yeah, we got like another minute or two. And then we'll get the numbers. I wonder if Jerome Powell is going to be like, fuck your calls. 50 basis points. Whap. That'd be so funny. I don't think he's going to do. I mean, it's not going to be. If he does hike, it's not going to be 50. Like, there's no way. That's like off the table. If they did that at this point, that would be highly irresponsible. There's just a lot of chopping around right now. Like look at that. Straight up, straight back down. Like, it's just insane. So I'm assuming that it's a hike, right? That looks like it would be a hike to me. Did we get a hike? Is that what happened? Nope. We got a. Did we get a pause? I think we got a pause. Yeah, so they're pausing. They're skipping this meeting. So we got a pause. So we got that huge wick that I was saying to knock everybody on both sides out of their positions. That's what's happening right now. You've got a lot of shorts closing out. And you've got a lot of people that are trying to buy into a dip as quickly as they possibly can here. So that's pretty much what's happening. Yeah, it's just crazy volatility. Like look at that. Look at that 3-minute candle. Like, what in the world? Up to 26? Or no. Up to 26.1 and down to 25.9. That's like, for in 3 minutes, that's a lot of price action to have happened in 3 minutes. It's pretty nuts. No, so the news that I'm reading is that they paused. I don't know. It's some people are saying paused. Others are saying that it's just unchanged. We'll have more clarity in his actual speech and stuff. But yeah, so far, like they're choosing to do nothing. I don't know if that actually means a pause or not. But certainly the press conference is going to be very interesting. At least the price action today isn't a nothing burger. That's pretty awesome to see. See what the SPX is doing. Everything is nuking on that news though. Like hard. Like, look at these look at that gap down. Like, holy crap. Fang unchanged. Look at the dollar. I knew it was the dollar. That's so funny. Like the biggest green dildo of your life, straight up. That's hilarious. Oh my God, that is so funny. It's because the dollar is just a giant green dildo, just woo! Oh man, that's so hilarious. The dollar is just absolutely destroying everybody. Everyone's like, oh man, but they're pausing. That's so bullish. And the dollar is just like, yeah, fuck you. That's hilarious to me. I'm sorry. I'm sorry if you were long and you just got absolutely obliterated, but this candle is hilarious. I mean, just the 5-minute chart is just like, what? Man, what an absolute shit show. Yeah, everything is just absolutely dying on this pause. I mean, so far at least. I mean, like, we're gonna get a lot more volatility. Like, it's not over until you sell. Yeah, it's not a loss until you sell, right? I made that mistake once and then I end up getting fucking liquidated. That's how I blew up my first account. I mean, yeah, Bitcoin, like, for the most part, I pretty much ignore the noise on anything below a 15-minute time frame unless it's my algo or has something to do directly with my algo. But in general, that's a pretty big bearish engulfing candle. But to be fair, this candle just opened. So for all we know, that could just be a massive wick to the downside and all this gets filled. Like, we don't know that yet. We'll have more clarity when his speech begins. It's going to be another maybe 15, 20 minutes or so. Then he'll do his speech. That only takes like maybe 5-10 minutes. And then they do the presser. I think they leave like maybe 30 minutes for the presser or so. The channel is still intact. Oh shit, I accidentally deleted my channel. No, I have to redraw it. There. The channel is back, boys. It didn't even break the midline. Like, that's so spicy. You're totally right, Odin. Yeah, so that's what I think. See, and this is the reason why everyone's, oh, you know, how come you just stream the FOMC? Like, they don't make the rate decision itself with the numbers live. And it's like, yeah, I get that. But it's what he says and the little tidbits that he gives you during the press conference when he gets to speak a little more freely. That's where you find some clarity in the decision. That's the most important part. That's why I like to stream the presser. That's the main reason why I say, oh, I'm streaming the FOMC. It's not necessarily for this. It's for what he says after the decision's been made. Because you get your initial volatility now when the number comes out. As soon as the number comes out, that's when you get your volatility. But sometimes you get even more volatility based on what he's going to tell you. And that's very important. That stuff cannot be overlooked. It's a good time to bring this meme out and be like, in my defense, Your Honor, I swear I was only buying calls. I got to make this into a really good meme because this is the only picture I found of him where he had like his hands up. It's so funny. This might break through the bottom of this channel here, guys. Oh yeah, no, 100% Odin. That's exactly why I do it. Like when he literally anytime somebody from the Fed, it doesn't matter who it is. It could be Vice Chair Barr. It doesn't matter. Anybody at the Fed that's making a speech somewhere it's just like, that's it. Like you can just watch the price action on the 1 minute chart. Oh, well, you know, we might be able to do this. And like, you just see the price action shoot up. And then, but on the other hand, you know, if this happens, then we'll probably end up doing this. And then the price comes right back down. And like, it's crazy. So we just tapped the bottom of that channel again. This is very interesting here. Watching this on the 15-minute chart, watching this channel hold. So I'll zoom in here. This is a massive bullish engulfing or bearish engulfing candle. Looks like we got some bulls getting liquidated. Looks like what? We got about 20 minutes before it starts. Yeah, so it says 2:30 Eastern time, which is 1:30 here in Kansas City. So we got about 20 minutes before he starts his speech and the presser. In the meantime, while that's happening, let's take a look at these liquidation charts, all right? Like, let's go see what the hell happened with this. So like the liquidity for the most part is just flat. It just wiped a lot out on both sides, but it didn't really, it's like no one's off sides here. Like no one's really been off sides here for, since pretty much here. So like, I guess 2 days ago. And the price actually just been fucking flat as hell. So let's zoom into this first, or most recent. And yeah, just nuke through all of those 100. So remember earlier before the stream, I said, hey, oh, wait, hold on, I messed up. Remember I said, hey, we'll probably nuke through those 100x liquidations. That's exactly what we just did. So now it's going to be up to the bears. Okay, how much are they going to push here? If they do, then we see a cascade through all this. So let's turn the granularity up a little bit and filter some of the smaller orders out. Let's go one more. Okay, so like this would be our next stop here. Okay, so like if you zoom in to this price action, right? This would be where your focus should be. It's like a 25.5. Okay, like that's where it would be. That would be like a small cascade to the downside. I don't even think this chart is probably, this probably hasn't even properly updated yet, but we'll go ahead and take a look anyway. So far, it looks like it's a little up to date. So we swept that first batch of liquidity, again, 25.5. That's where you'd be looking on small time frames to maybe try and knife catch it. But I probably wouldn't be trying to knife catch this one here. Probably not the best of ideas. So rates unchanged or paused so far. Not really too sure if it's paused or skipped at this point. There's a lot of back and forth about this so far from what I'm reading on Twitter and stuff. Like some people are not understanding if it's paused or if it's that maintain their rate. Yeah, see, like some people are just, oh, they maintained their rate. Some people are saying paused. Some people are saying skipped. Fed signals additional rate increases possible later this year. So it's like, okay, that means that that's from FX Hedge. And I know that that's not the most reliable news people, but it's basically like, okay, we just, that sounds like a skip to me. That doesn't sound like a pause. And I don't see how they could pause. They need to just skip a meeting, see how everything goes for the next 2 or 3 months, and then make a decision of like, okay, we're gonna keep the rates here and skip or pause here. Like now we're pausing until the end of the year. Oh my God, there's like a lot of permabulls that are just like absolutely wrecked on this. Federal Reserve officials agree to hold interest rates steady after 10 consecutive increases, but 12 officials see rates rising to a range of at least 5.5 to 5.75 this year. 4 more officials have at least 1 more rate hike this year. Only 2 Fed officials see no more hikes. So basically they're pausing for June, and the rest of the year they're going to keep hiking again. They're 25, 25, 25 until the end of the year. That's basically what's happening. They're going to give the markets a break, and then they're going to keep hiking until the end of the year. That's pretty much what it's sounding like to me right now. I hope that doesn't bust anybody's bubbles, but if you're a permabull, chances are your bubble has just been burst. Blown. What's Venom doing? Hey, Venom's shorts in profit. All right, let's go. Hit that partial take profit, boy. Let's get it. So far this month, by the way, those of you interested, if you guys like making passive income or don't always have the time to trade, check out my website, cobra-trading.com. All the information on my automated trading strategy that's hosted on Astrobit is there. And you can find out a ton of information. So far this month, and I'll go into that for those of you that are interested at the end of the stream and stuff, since he's going to be talking here in just a couple minutes. But so far this month, not a single losing trade. So this is this month. I'll just show you the list of trades here. Boom. And this is actually, let me refresh this because technically that is wrong right now. Actually, let me just take this off and then I'll just reload it. Bing. All right. List of trades. Okay, cool. So here we go. Yeah, this is still calculating incorrectly here, but this is late to update for open positions. But anyway, these are the trades that it has taken since here is the beginning of the month. It had a 0.5% loser, and then that's it. Every other trade was a win, whether it was a small win or not. Now, keep in mind, some of these are really low percentage wins, but at least they weren't losses because this is after fees. So I think the cumulative profit so far before this short is something like 7.5% for this month. So like doing 7.5% on spot in 2 weeks, it ain't too bad. Ain't too bad at all. It is performing just as I expected it to, which is awesome. That's exactly what I want. All right, boys, get the joints, light up the bongs, get the oils. We're getting ready for this speech and continuing to the downside. Oh no, I'm running out of oil. Help. Someone send live resin. Oh no, it's clogged. Oh man, I'm having all kinds of issues. Jesus Christ, I know that somebody's about to freaking screen cap me like fucking sucking on this goddamn thing like crazy till my cheeks are in and just turn it and just meme the shit out of it. It's gonna be so bad on Twitter. I gotta do it off camera. Or is that might actually make it worse? Because then it looks like I'm like leaning off the side of the camera. Yeah, we like to have fun here on the stream. Make sure that you guys like and subscribe to the channel if you're new here. I do, and I'm still doing my stream on Friday. So there's that. We'll do a little weekly roundup, you know, at the end of the week and everything. Let the dust settle after this. I don't think there's any more numbers coming out this week. Let me just check. I think that's pretty much it for the numbers. We already got the unemployment data and stuff last week. We got the mortgage applications and all of that stuff yesterday. We got the PPI today. We got the rate decisions today. Press conference is about to happen tomorrow. Oh, okay, so we get jobless claims tomorrow. And retail sales. Man, this whole week is just a disaster with numbers. Holy shit. Business inventories. So the big ones still that we have for this week, the Fed's Bullard is going to be making a speech. James Bullard, he's the president of the Federal Reserve Bank of St. Louis, which is out by me in Missouri, is going to be making a speech on Friday. But tomorrow we have initial jobless claims, continuing jobless claims, and retail sales. So those are going to be like the big things coming up that we have for tomorrow. Yeah, Tyler, mine are too. So like, see how like empty this one is? Like, look at all the resin that's up by like the top of it. It just like sits up there for some reason and gets clogged. I don't know what that's all about, but whatever. These are cheap. I get I've got a medical card because I have cancer. So I get my cards cheap. I get like 0.5 grams for like $30 with no taxes at the dispensaries. So it's pretty legit. So I can get like 3 or 4 of these things for like $100. It's pretty cheap. So, I mean, I don't mind that they clog at the end. It is what it is. Should actually order some more of those. So I get mine from here for those interested. It's called FOMC Wellness, and they do, their locations are Kansas City. There's one in Liberty that just opened, North Kansas City, where I am, and then Smithsville and Warrensburg. And they've got tons of stuff, which is really cool because I can order for delivery. I don't even have to like leave my house to get my stuff, which is fantastic. I cannot tell you how awesome that is. A lot of these companies even medical label things as live res when it's distillate, I guess. I never pay the extra money for anything that says that it's live resin. Like if it costs a shit ton more, I normally just don't get it. Because it's just like, again, like you said, it's just mislabeling of stuff, or they'll mislabel it on purpose and call it live resin because they know that there's really no way for an average consumer to tell unless they're a fucking scientist and have a lab in their house. So normally I don't, normally I do not do that. So I'm going to log into my account here. Yes, I'm 21. What the fuck? Let me log into my account. Gotta order. Home delivery. Damn straight. All right, so cartridge and sort by price, low to high, of course. See, like, look at these: Austera grape ape distillate, half gram, $30. 0.5 OB Kush distillate, $30. So like, this is the stuff that's at like my local store. And obviously I'm paying a premium for stuff that, you know, like most of them are like 40. Some of them are a little cheaper. But I like the stuff from Sense Labs. I also like the stuff from Elevate. And I've never tried Austera or whatever. Those are not rated, but it's looking like they don't even have the same ones that I got last time. This was on sale. Gummy bears? Yeah, see, like, that's on sale. $31 for some Sense Labs gummy bears. Like, that's the kind of thing that it's like, okay, I'm just gonna like buy 4 of them and just like, you know, whatever. That's probably what I'll end up doing later on today. All right, we got his speech. Starts in about 9 minutes or so. We're getting close. Let me close out some of these tabs over here. I'm just getting absolutely bombarded. And I just got a text message. Oh, I got an email. I thought PNC Bank was having troubles. Why did I just get an email? Scott, you can earn $200 by switching back to PNC. It's like, dude, I left PNC Bank because it's garbage. Like, why would I go back after I switched to a credit union? Like, it doesn't make any sense. By the way, credit unions for the win. I switched to Navy Federal. My parents are veterans, so I'm able to switch to Navy Federal. Some of you may not be able to do that, but I did, and it's awesome. Definitely no regrets. Try Select if you have not yet. Select. See, I got the Bison ones last time, and I got 3 of them. And honestly, for how much these get clogged, like, don't get me wrong, the distillate is really good, but for how badly the Sense ones that I got, those never got clogged. The Bison ones that I got, they were cheaper, and like, these things clogged really bad. Select. Oh, are those like so what? Those Select ones, those are like the disposable ones, right? I don't like the disposable ones because I use a Yokan. I don't like the disposable ones. Definitely try Select. 1 gram carts are 80, 85 here, sometimes for sale as low as 65. They offer disposable, but I do the carts. See, I think for the Select ones here, let me just Let me select, because I can like filter them out. Let me, let's just click that and see what they got. Yeah, see, they only have the disposable ones. They might have one at a different store that I can physically drive to, but we'll see. Yeah, see, like this price action, it had like one nice candle, a wick in both directions, one big red candle, and then it just stopped. So I'm wondering, no, the dollar definitely did not stop. The S&P 500 is just absolutely getting wrecked right now. It did a full round trip today. It round tripped all the way. From where it opened, it round tripped and tapped the daily open. So it filled the order block, it filled the gap up, which is nice. This technically should be changed into support here. If we zoom out, oops. If we zoom out just a tad. Wow, yeah, that's a pretty monster of a candle right there. It closes in 5 minutes too. That's not a nice looking hourly close if it round tripped the entire day. So those orange lines come up to a daily. This is what I got. We had a super sloppy overall trend line breakdown here, and it kind of reversed here, but in the process of doing this, this tap, I'll just circle them for you. This tap, this tap, this tap. And then when it finally went to retest this trend line, like, you know, again, you know, for the first time after breaking out of it, and we got that really sloppy breakout, this was the second touchdown here. So that formed a giant wedge here. Obviously, I'm not saying that, holy shit, like we're going to have like a massive breakdown and see like 3,000. That's not what I'm saying. But they're at least trend lines that I'm going to be paying attention to. If that makes sense. When Cobra weed tutorial? I don't know. I mean, McShiverson needs to get his ass back over to my house for some whiskeys and for, man, I need more of those. I need more of them ice cubes that you brought by that one time, man. Those clear ice cubes were awesome. I'm not really doing anything this weekend, so maybe if you got time, maybe you can stop on by. We'll hit a cart and have a nice glass of whiskey or something. I'll DM you on actually, I think don't I have your phone number? I think I do. I'm not sure. I do. Yeah, no, I'll just text you or something. If you're not doing anything this weekend, maybe we can hit a cart, hit a cigar. Oh, dude, I don't know, McShiverson, I don't know if you know, but I found the most awesome place to get cigars here. Like an actual cigar store where they have, like, it's actually a liquor store, but they have a humongous cigar selection, like to the point where like all of the cigars and all the stuff is like in its own separate room, and the whole room itself is a humidor. And then there's separate humidors in there with like where they keep like the boxes and stuff. It's really, really legit. I found a really, really awesome one. So I don't know if you like to enjoy a cigar every now and then. Obviously I'm a smoker. I smoke everything. Except for crack, you know. You know, cigarettes I smoke, whatever. Actually, I have not had a cigarette since I started working out 2 weeks ago. Haven't had a cigarette, haven't had a sip of alcohol during the week. I'll still have like a couple beers or whatever on the weekends, but no drinking at all during the week. Like even when I'm like, oh, finally I'm done with work and I'm playing some video games, I won't drink beer as I'm playing video games during the week anymore. That was like really killing me. Tons of excess calories for like literally no reason. Working out has really been awesome. I've been carb cycling. Today was carb day. That's why I had noodle salad for lunch with chicken. Breakfast, bacon, egg, and cheese bagel, right? Dinner tonight is going to be pasta, you know, like more pasta. So I've been carb cycling. I've been putting myself into a hardcore calorie deficit and working out for an hour, 5 days a week, no drinking during the week, no cigarettes at all. And I've been taking protein shakes and another powder that is a bunch of fruit and vegetable extracts. So I get like extra doses of like fruits and vegetables and the protein to rebuild muscle. And then my vitamin stack, calcium, magnesium, zinc, fish oil, D3, B complex, I think is what I take. All those. And I feel like incredible. I've lost about 7 pounds. I've built up probably 2 pounds of muscle mass at least. Tons of energy, super focused, motivated. Like I just feel awesome. Feel a lot better. And the beer gut's kind of going away. Gotta jack up the guns. Gotta jack up the guns while I regrow the beard, Let's see. 16:8 fast. I don't know what that means. You mean intermittent fasting. Yes, I have been doing that too. The intermittent fasting. So I only eat unless it's carb day, like today. I eat dinner at no later than 7. So like 7 p.m. is my last meal. And then I won't eat anything until after that. All right, so let me go ahead and pause the music here. His speech is starting. Let's get this on the screen.
Good afternoon. My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. We understand the hardship that high inflation
I know.
is causing, and we remain strongly committed to bringing inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve. Without price stability, the economy doesn't work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all.
Shit, hold on.
Since early last year, the FOMC has significantly tightened the stance of monetary policy. We have raised our policy interest rate by 5 percentage points, and we've continued to reduce our securities holdings at a brisk pace. We've covered a lot of ground, and the full effects of our tightening have yet to be felt. In light of how far we've come in tightening policy, the uncertain lags with which monetary policy affects the economy, and potential headwinds from credit tightening, today we decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. Looking ahead, nearly all committee participants view it as likely that some further rate increases will be appropriate this year to bring inflation down to 2% over time. And I will have more to say about monetary policy after briefly reviewing economic developments. The U.S. economy slowed significantly last year, and recent indicators suggest that economic activity has continued to expand at a modest pace. Although growth in consumer spending has picked up this year, activity in the housing sector remains weak, largely reflecting higher mortgage rates.
Good.
Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Committee participants generally expect subdued growth to continue. In our summary of economic projections, the median projection has real GDP growth at 1.0% this year and 1.1% next year, well below the median estimate of the longer-run normal growth rate. The labor market remains very tight. Over the past 3 months, payroll job gains averaged a robust 283,000 jobs per month.
That's
the
so
unemployment
bad.
rate moved up but remained low in May at 3.7%.
Too many jobs,
There are
not
some
enough
signs
people.
that supply and demand in the labor market are coming into better balance. The labor force participation rate has moved up in recent months, particularly for individuals aged 25 to 54 years. Nominal wage growth has shown signs of easing, and job vacancies have declined so far this year. While the jobs to workers gap has declined, labor demand still substantially exceeds the supply of available workers. FOMC participants expect supply and demand conditions in the labor market to come into better balance over time, easing upward pressures on inflation. The median unemployment rate projection in the SEP rises to 4.1% at the end of this year and 4.5% at the end of next year. Inflation remains well above our longer-run 2% goal. Over the 12 months ending in April, total PCE prices rose 4.4%, excluding the volatile food and energy categories. Core PCE prices rose 4.7%.
That's without food.
In May, the 12-month change in the Consumer Price Index came in at 4%, and the change in the core CPI was 5.3%.
Jesus.
Inflation has moderated somewhat since the middle of last year. Nonetheless, inflation pressures continue to run high, and the process of getting inflation back down to 2% has a long way to go. The median projection in the SEP for total PCE inflation is 3.2% this year, 2.5% next year, and 2.1% in 2025. Core PCE inflation, which excludes volatile food and energy prices, is projected to run higher than total inflation, and the median projection has been revised in the SEP up to 3.9% this year.
Oh, you think?
Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people.
His normal spiel for his
My
closing
colleagues and I
statement.
are acutely aware that high inflation imposes hardship.
Affects consumers and families.
Erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. As I noted earlier, since early last year, we have raised our policy rate by 5 percentage points. We have been seeing the effects of our policy tightening on demand in the most interest rate sensitive sectors of the economy, especially housing and investment. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. The economy is facing headwinds from tighter credit conditions for households and businesses, which are likely to weigh on economic activity, hiring, and inflation. The extent of these effects remains uncertain.
Uncertain.
In light of how far we've come in tightening policy, the uncertain lags with which monetary policy affects the economy, and potential headwinds from credit tightening, the committee decided at today's meeting to maintain the target range for the federal funds rate at 5 to 5.25%, and to continue the process of significantly reducing our securities holdings. As I noted earlier, nearly all committee participants expect that it will be appropriate to raise interest rates somewhat further by the end of the year. But at this meeting, considering how far and how fast we've moved, we judged it prudent to hold the target range steady to allow the committee to assess additional information and its implications for monetary policy. In determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. In our SEP, participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. If the economy evolves as projected, the median participant projects that the appropriate level of the federal funds rate will be 5.6% at the end of this year, 4.6% at the end of 2024, and 3.4% at the end of 2025. For the end of this year, the median projection is a half percentage point higher than in our March projections. I hasten to add, as always, that these projections are not a committee decision or plan. If the economy does not evolve as projected, the path for policy will adjust as appropriate to foster our maximum employment and price stability goals. We will continue to make our decisions meeting by meeting based on the totality of incoming data and their implications for the outlook for economic activity and inflation, as well as the balance of risks. We remain committed to bringing inflation back down to our 2% goal and to
Yeah, we
keeping
get it. You said
longer-term
that already.
inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do at the Fed is in service
Unless,
to
of
our
course, we
public
need to
mission.
bail out more banks. That's a
We
good
do
one.
everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
All right, here we go with the BS questions.
Thank you. Colby Smith with the Financial Times. I'm curious what
Oh,
gives you and the
good
committee
God.
the confidence that waiting will not be counterproductive at a time when the monthly pace of core inflation is still so elevated. Interest rate sensitive sectors like housing, while they felt the drag of the past Fed actions, have started to recover in some regions, and financial conditions, most recently were easing.
They're not.
So
I don't know what planet you live on,
I guess I
honey.
would go back to the beginning of this tightening cycle to address
Do
that.
you buy
So as
food?
we started our rate hikes early last year, we said there were 3 issues that would need to be addressed kind of in sequence. And that of the
Yeah,
speed
I
of
know.
tightening,
Bacon,
level
it's the
to
same
which
girl
rates would
all
need
the
to
time,
rise,
like,
and then the period
with the
of time over
dumbass
which we
questions.
need
It's
to
like,
keep
oh, well, it
policy
seems like
restraint.
it's going
So
away.
at the outset,
What the
going back
fuck?
15 months, the key issue was how fast to move rates up, and we moved very quickly by historical standards.
God, yeah,
Then
you
last
did.
December, after 4 consecutive 75 basis point hikes, we moderated to a pace of a 50 basis point hike, and then this year to 3 25 basis point hikes at sequential meetings.
Dude, that's
So it
such an
seemed to
insult.
us
Can you
to be,
imagine being to every
obvious
single
sense
one of
to
these press
moderate the rate
conferences
hikes
and then
as we
Jerome
got
Powell
closer to our
himself
destination.
has to fucking
So the
explain it to
decision
you like you're
consider
5,
not hiking at every
like you
meeting,
haven't been there for the last
and ultimately
year?
to hold rates steady at this meeting, I would just say it's a continuation.
I would be embarrassed
of
if I asked that
process.
question.
The main issue that we're focused on now is determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time. So the pace of the increases and the ultimate level of increases are separate variables.
It's also
Given
kind of
how
funny.
far
She
it
gave
will
him
come,
a
it
scripted
may make
question,
sense for
and
rates
he's
to
giving
move
her
higher,
a
but at more
scripted
moderate
response.
pace. I want to stress one more thing, and that is that the committee decision made today was only about this meeting. We didn't make any decision about going forward, including what would happen at the next meeting, including we did not decide or really discuss anything about going to an every other meeting kind of an approach or really any other approach. We really were focused on what to do at this meeting.
So there was no kind of initial debate about the possibility of July, any sense of the initial support at this stage? For
No, he's not going to tell you what they're doing.
We didn't make a decision
month
about
or two
July,
from
but of
now.
course it
Fuck.
came up in the meeting from time to time.
Quit it, lady.
But really, the focus was on what to do today. I would say about July, 2 things. 1, decision hasn't been made. 2, I do expect that it will be a live meeting.
Yeah, call on anyone else.
Thanks, Howard Schneider with Reuters. I was just wondering if you could help
nice.
us understand
Okay.
the narrative here, because it feels like there's been a level shift in the dots. Stronger GDP, less of a hit to unemployment, slower progress on inflation. And I'm wondering, in this, sort of, where's the disinflation coming from?
Sure.
The labor market's going to be stronger, it looks like. It's not coming from there.
I like this guy.
Demand's not coming down
This
all
guy
that
is
fast,
funny.
According to GDP, you've doubled your estimate of GDP. So what's the
Everything
narrative
still
here?
is
It seems
going
like
up. It's
getting
going
more
down a lot
macro
slower than you wanted.
next
So how is it disinflate? He literally asked the exact opposite of what the last girl asked.
Consistent with, but on the high side of expectations. So, and if you go back to the former SEP, the last SEP in March, you will see that growth moved up. These are not huge moves, but growth estimates moved up a bit. Unemployment estimates moved down a bit. Inflation estimates moved up a bit. And, all 3 of those kind of point in the same direction, which is, that perhaps more restraint will be necessary than we had thought at the last meeting. So, although the level, frankly, is pretty, the level of 5.6 is pretty consistent if you think about it, where the federal funds rate was trading before the bank incidents of early March. So we've kind of gone back to that. So your question is, where's the disinflation going to come from? And I don't think the story has really changed. The committee has consistently said and believed that the process of getting inflation down is going to be a gradual one. It's going to take some time. And I think you go back to the three-part framework for core PCE inflation, which is, we think, as good an indicator as you can have for where inflation is going forward. You start with goods. With goods, we need to see continued healing in supply conditions, supply-side conditions. They've definitely improved a substantial amount, but if you talk to people in business, they will say it's not back to where it was. So that's one thing, and that should enable goods prices to continue, goods inflation to continue to come down over time. In terms of housing services inflation, that's another big piece, and you are seeing there that new rents, new leases are coming in at low levels, and it's really a matter of time as that goes through the pipeline. In fact, I think any forecast that people are making right now about inflation coming down this year will contain a big dose of this year and next year will contain a good amount of disinflation from that source, and that's, again, probably going to come slower than we would expect. That leaves, the big sector, which is a little more than half, pardon me, of core PCE inflation. That's non-housing services, and we see only the earliest signs of disinflation there. It's a sector, it's a very broad and diverse sector. I would say in a number of the parts of that sector, the largest cost would be wage costs. It's the service sector, so it's heavily labor intensive, and I think many analysts would say that the key to getting inflation down there is to have a continuing loosening in labor market conditions, which we have seen. We have actually seen, I go through a number of indicators suggesting there's been some loosening in labor market conditions. We need to see that continue. I would almost say that the conditions that we need to see
some of you may die, but that's a risk I'm willing to take.
Growth,
Lord Farquaad from Shrek.
It would be goods pipelines.
Some of you may
healthier
die.
and healthier and that kind of thing. The things are in place that we need to see.
He basically just told this guy,
actually working on inflation is
like without saying it, that too many people have money.
Signaling
What?
future hikes versus just hiking now. I mean, not to be flippant, but I don't lose weight just by buying a gym membership. I have to actually go to the gym. 16 of your colleagues put down a higher year-end 23 rate today. A majority of you think you're going to have to go up by 50 basis points this year. So why not just rip off the Band-Aid and raise rates today?
Yeah, exactly.
First, I would
That's
say
my
that
thing.
the
I
question
think
of
that's a good
speed
question.
Is a separate question from the question from that of level. Okay, so. And I think if you look at the SEP, that
Oh,
is
whatever, dude.
Individual, it's really accumulation of our individual estimates of how far to go. I mentioned how we got to.
We've gone up 5.5. Just do the other half a percent. Like, come on.
Important last year, as we get closer and closer to the destination, and according to the SEP, we're not so far away from the destination in most people's accounting. It's reasonable, it's common sense to go a little slower, just as it was reasonable to go from 75 basis points to 50 to 25 at every meeting. And so the committee thought overall that it was appropriate to moderate the pace, if only slightly. And there are benefits to that. So that gives us more information to make decisions. We may try to make better decisions. I think it allows the economy a little more time to adapt as we make our decisions going forward. And we'll get to see, we don't know the full extent of the consequences of the banking turmoil that we've seen. It would be early to see those, but we don't know what the extent is. We'll have some more time to see that unfold. I mean, it's just the idea that we're trying to get this right. And this is, if you think of the two things as separate variables, then I think that the skip, I shouldn't call it a skip, the decision makes sense.
I know you said July is live. With only one June employment, with only the June employment and the CPI report for June due to be released before the July meeting, you get the ECI after, you get the senior loan officer survey after, you get some bank earnings at the end of next month. What incremental information will the committee be using to inform their judgment on
He's answered. See, come on, man. How are you going to follow up with a dumbass question? He's told you a million times.
To the data that we've seen since the last meeting too. Since we chose to maintain rates at this meeting.
He goes over what they use to base their decisions off of every single meeting, and they keep asking. And it's the same reporters. They never change.
6-week period. We'll look at those things. We'll also look at the evolving risk picture. We'll look at what's happening in the financial sector. We'll look at all the data for the evolving outlook. and we'll make a decision.
Gina.
Oh, no.
Thanks for taking our questions. Gina Smilek, New York Times. You obviously, in your forecast, marked up the sort of path for growth, marked down the path for unemployment, marked up the path for inflation pretty notably. I wonder, you know, since March, what has changed to make you think that the economy is a lot more resilient and inflation is going to be a lot more stubborn? And given that, you know, why do you feel confident that this is as high as you're going to have to revise the federal funds rate, or do you think it's possible we could have even a higher than 5.6% terminal by the end of this cycle?
It's literally.
You know,
Oh my God.
I just think we're following the
Did she
data.
not listen
And
to
also
his
the
written
outlook,
statement
the economy
before,
is-
like-
the labor market, I think, has
I
surprised.
swear, man, people are
many, if
dumb.
not all analysts over the last couple of years with its extraordinary resilience, really, and it's just
True-flation.
remarkable. And that's really, if you think about it, that's what's driving. It's job creation. It's wages moving up. It's supporting spending, which in turn is supporting hiring, and it's really the engine, it seems, that is driving the economy. So it's really the data. In terms of, you know, we always write down at these meetings what we think the appropriate terminal rate will be at the end of this year. That's how we do it. It's based on our own individual assessments of what the most likely path of the economy is. It can actually, in reality, wind up being lower or higher. And you know, there's really no way to know. But it's what people think as of today. And as the data come in, it can move around during the intermeeting period. It could wind up back in the same place, but it really will be data driven. I can't tell you that I ever have a lot of confidence that we can see where the federal funds rate will be that far in advance.
Mr. Chairman, thanks for taking my question. You had said back at the end of May that you thought risks were getting closer to being into balance. Is that still the case, or has your mind changed about the balance of risks out there? And also, could you give us an idea of what would be a sufficiently restrictive funds rate? Obviously, the current rate, according to the committee, is not sufficiently restrictive. Is it 5.6? Is it 6? Where's sufficiently restrictive? Thank you.
He's leaving the top
I
open.
would say again, that
Just
I
like
think
they
that
do with the
over
debt
time,
ceiling.
The balance of risks, as we've moved from from interest rates that effectively
The ceiling
zero
always
now to
goes
5
up.
percentage points with an SEP calling for additional hikes. I think we've moved much closer to our destination, which is that sufficiently restrictive rate. And I think that means, by almost
You
by
won't tell
definition,
anybody
that
what it is.
The risks of sort of overdoing it and underdoing it are getting closer to being in balance. I still think, and my colleagues agree, that the risks to inflation are to the upside still. So we don't think we're there with inflation yet, because we're just looking at the data. And if you look at the full range of inflation data, particularly the core data, you just aren't seeing a lot of progress over the last year.
See,
Headline,
the
of course,
full
is
range. He just said
materially,
exactly what I
but as you
typed.
know,
The
we look at
full
core
range of
as
data,
better indicator of where
including food and
inflation overall is
housing,
going.
and it's not there.
So I think, you know, what
We're
we'd
not
like
there
to
at
see
all.
is credible evidence that inflation is topping out and then beginning to come down. That's what we want to see. Of course, that's what we want to see. And I think it's also, we understand that there are lags, but remember that it's more than a year since financial conditions began tightening. I think the reason we're comfortable pausing is that we are still, much of the tightening took place over last summer and later into the year.
Yes.
And I think it's reasonable to think that some of that may come into effect. So we're, I think, stretching out the.
Oh,
the
see that little tidbit he just
to allow them to
dropped?
make that judgment of sufficiency, with more data over time.
Rachel.
Hikes into the end of the year. He basically just
Hi,
said it
Joanna.
without
Rachel
saying it.
Steele from the Washington Post. Thanks for taking our questions.
Oh my God,
I
fuck
wanna
the
talk
Washington
further
Post.
On the lag effects, when you're considering when you would hike again throughout the course of the year, are there things that you would expect to kick in as those lag effects come?
What
come
does
into
that even
effect
mean?
Would inform your decisions. Have you learned things over the past year that give you some sense of?
Oh my God, he
timeline
just
for when to
answered the
expect those
same
lag
thing.
effects to affect?
What are you using to make the decision off of? Well, why does everybody keep
It's a
asking him the
challenging,
same question?
thing in economics. It's sort of standard thinking that monetary policy affects economic activity with long and variable lags. Of course, these days, financial conditions begin to tighten well in advance of actual rate hikes. So if you look back when we were lifting off, we started talking about lifting off. By the time we had lifted off, the 2-year, which is a pretty good estimate of where policy is going, had gone from 20 basis points to 200 basis points. So in that sense, tightening happens much sooner than it used to in a world where news was in newspapers and not, not on the wire. So that's different, but it's still the case that what you see is interest-sensitive spending is affected very, very quickly, so housing and durable goods and things like that. But broader demand and spending and asset values and things like that, they just take longer, and you can pretty much find research to support whatever answer you would like on that. So there's not any certainty or agreement in the profession on how long it takes. So, and that makes it challenging, of course. So we're looking at the calendar, we're looking at what's happening in the economy, we're having to make these judgments. And again, it's one of the main reasons why it makes sense to go at a slightly more moderate pace now as we seek that ultimate, I can't point to that ultimate endpoint. I can't point to a specific data point.
Number.
We'll see it when we see inflation, really flatten.
Yeah,
out.
everyone's asking him for a specific Fed funds rate number, and it's just the ceiling is open. Like once everything starts going back to normal and everything gets in balance, that's when
I
they'll
was curious if you could give us an
start
update on what
cutting.
you're seeing on credit tightening since the bank incidents from March and how you're teasing that out apart from these lag effects.
So it's too early still to try to assess the full extent of what that might mean. And that's something we're going to be watching, of course. And
If those banks are going through litigation, that's going to take years. It's not going to have a direct effect on the economy at this point. Those banks failing already had their effect on the economy.
Channel, then we would factor that into account in making rate decisions. So that's
Pam from The Office needs to. She does look like Pam, dude. Bacon for the win. That's so
Thanks.
funny.
Chris Rugaber at Associated Press. You mentioned that many of the trends are in place that you want to see. Core services ex housing has come in pretty low in the past couple of months. And as you noted, a significant portion of core inflation is now housing prices. And then we've had some quirks in used car prices. So given that these trends are in place, I guess I'm sort of asking the flip side of Nick's question, why signal additional rate hikes? Aren't things headed in the direction you need? Why not simply give it even more time? Or it's surprising to see so much hawkishness in the dots given what we're seeing recently.
Yeah, so we've we're 2.5 years into this, or 2.25 years into this, and forecasters, including Fed forecasters, have consistently thought that inflation was about to turn down, and traditional.
And it never did, because you printed $9 trillion.
I think if you look at core PCE inflation overall, look at it over the last 6 months, you're just not seeing a lot of progress. It's running at a level, over 4.5%, far above our target, and not really, moving down. We want to see it moving down decisively. That's all. Of course, we are going to get inflation down to 2% over time. We don't want to do. We want to do that with the minimum damage we can to the economy, of course. But we have to get inflation down to 2%, and we will.
The less damage you want to do to the economy, the longer it takes. We're only 2 years into it. The fallout from 2008, it was like 10 years before everything for consumers got back to normal.
Somewhat the pace with which we're moving.
Quick follow-up. I mean, the last press conference you mentioned you didn't see wages driving inflation, and there was some research from the San Francisco Fed suggesting wages aren't necessarily a key driver, but you've talked about the labor market today and the need for softening. Can you give us a little more specifically of how you see the tight labor market driving inflation at this point? Thank you.
Right. So.
You've got 2 jobs for every one unemployed person, and it's a fucking disaster with the lowest unemployment rate in history.
Beginning in early 2021, inflation was really coming from very strong demand largely for goods. People were still at home. They had money in the bank, and they wanted to spend. They spent a lot on goods, and of course, at the same time, and because of that high demand, to some extent, supply chains got all snarled up. So prices went way up, inflation went way up. So that was the origin, and it wasn't really particularly about the labor market or wages. But as you move through 21 into 22 and now in 23, I think many analysts believe that it will be important, an important part of getting inflation down, especially in the non-housing services sector, to getting wage inflation back to a level that is sustainable, that is consistent with 2% inflation. We actually have seen wages broadly move down, but just
What
at
is
a quite
the NASDAQ
gradual pace.
doing?
So, and that's a little bit of the finding of the Bernanke paper with Blanchard of a few weeks ago, which is very consistent with what I would think.
Let's go to Michael McKee.
Michael McKee from Bloomberg Radio and Television. You said in the past that you don't like to surprise markets. It's kind of been the Fed's view. Markets should have an idea of what you're going to do before you go in. You also said a number of times that it would take a while to bring inflation down. You reiterated that again today, and that we would get to a point where inflation could be sticky. So I'm wondering, as we go into the next meetings, how Wall Street or others should look at your reaction function. What will you be reacting to, time or data? In other words, if nothing much changes, if we're looking at the same sort of labor market, the same sort of inflation levels in July or in September or November, will you move because you've said you feel you need to? Is it time that's going to require additional movement, or would it be a reversal in inflation?
So I don't want to deal with hypotheticals about different ways data might move out. So we of course we don't go out of our way to surprise markets or the public. At the same time, our main focus has to be on getting the policy right, and that's what we're doing here, and that's what we'll do for the upcoming meetings. I will say the July meeting will be live, and we'll just have to see. I think you'll see the data. You'll hear Fed people.
Did he just say the July meeting will be live?
Make a judgment.
Well, do you think inflation is likely to continue coming down based on the lags and
Like, I
based
didn't-
on your threat of additional
I didn't
movement?
just
Or are we going to be in a
hallucinate
period
that,
where we're not
right?
gonna know
Like-
what's happening?
I think if you look at, if you just look at, I'll just point you to the forecast. So inflation is running, core PCE inflation is running at about 4.5%, a little higher than 4.5%, and the median FOMC participant thinks it'll go down to 3.9 on a 12-month basis. This is by the end of this year. So that's expecting pretty substantial progress. That's a pretty significant decline for half a year. So that's the forecast. We do try to be transparent in our reaction function. We're committed to getting inflation down, and that's the number one thing. So that's how I think about it.
Let's go to Victoria.
Victoria Guido with Politico. Could you talk about the balance sheet and how you're thinking about it? What are you looking for to judge?
Yeah,
whether
dibs.
we're
I'm pretty sure I heard that
reserve
too.
Scarcity, and is Treasury issuance going to affect that? Also,
Okay.
are you considering lowering the RRP rate in order to take some pressure off banks?
So let me say first
No,
of all,
fuck the
Treasury
banks.
part of it, if I can talk about that, and then go back to the balance
If they
sheet.
made bad bets and they made bad
So on
loans
that,
and just handed out money, that's on them, man. If their books are bad, it's on the banks for bad management. Fuck them and put them into litigation.
I saw the Secretary's comments yesterday to the effect that Treasury has consulted widely with market participants about how to avoid market disruption, and that they're going to watch carefully for that. So that's from the Treasury, which actually sets the borrowings. At the Fed, we'll be monitoring market conditions carefully as the Treasury refills the TGA. The adjustment process is very likely to involve both a reduction in the RRP facility and also in reserves. It's really hard to say at the beginning of this which will be greater. We are starting at a very high level of reserves and still elevated RRP to take up, for that matter. So we don't think reserves are likely to become scarce in the near term or even over the course of the year. So that's the Treasury part of the answer. We will, of course, continue to monitor conditions in money markets, and we're prepared to make adjustments to make sure that monetary policy transmission works. Was there another part of your question?
Yeah, what, are you considering lowering the RRP rate to help take some pressure off banks?
So we have a number of, I would say, the RRP doesn't look like it's pulling money out of the banking system. It's actually been shrinking here lately. So I don't think, that's not something we've thought about a lot over time. It doesn't really look like that's something that we would do. I think it's a tool that we have. If we want to use it, we can. There are other tools we can use to address money market issues, but I wouldn't say that that's something that's likely that we would do in the near term.
Janelle Marte with Bloomberg. Have you seen sufficient cooling in the housing market to bring inflation down? For example, how does the recent rebound affect your forecast, and how does it factor into monetary policy?
So certainly housing, very interest sensitive, and it's.
What is everybody's deal with constantly asking about housing? I mean, like, I get that obviously the interest rates affect lending and duh, like obviously I'm well aware of all of this, but it's like,
we're watching that situation.
you see what he's doing.
We will see rents
higher for longer.
And house prices filtering.
0 to 3% interest rates on housing is practically unheard of in America's history. Like besides 2008, and look at what that happened with that.
Kind of wandering around at a relatively low level now, and that's appropriate.
Do you think you'll have to target that with further rate increases?
Well, I think we look at everything. We don't just look at housing. So I think
we don't just look at housing, lady.
Participants sit in their offices all over the country and they write down their forecast, and including their most likely forecast, including their rate forecast, and then they send it in on Friday afternoon, and we accumulate it, and then we publish it for you. So that's how they do that. Well, I don't know that housing is itself going to be driving the rates picture, but it's part of it.
Let's go to Edward.
Thank you for taking the question, Mr. Chairman. Edward Lawrence with Fox Business. So I want to go back to comments you made about, in the past, about unsustainable fiscal path. The CBO projects the federal deficit to be $2.8 trillion in 10 years. The CBO also says that federal debt will be $52 trillion by 2033. At what point do you talk more firmly with lawmakers about fiscal responsibility? Because monetary policy cannot handle alone.
We just can't keep printing fucking money.
Spending.
I don't do that. That's really not my job. We
Ooh.
and expect that policymakers will respect our independence.
And he's always been firm on that, though. He'll never do it.
We don't see ourselves as the judges of appropriate fiscal policy. I will say, and many of my predecessors have said, that we are on an unsustainable fiscal path, and that needs to be addressed over time. But I think trying to get into that with lawmakers would be kind of inappropriate, given our independence and our need to stick to our knitting.
Is there any conversation then about the Federal Reserve financing some of that debt that we're seeing coming down the pike?
No, under no circumstances.
Under no circumstances. Super firm answers.
Questions, Chair Powell. So looking at the SEP, it looks like GDP for this year was raised significantly, your forecast for GDP this year. The unemployment rate, meanwhile, was pulled downward. And so should we take that as a sign that the committee is more confident about the prospects of a soft landing, at least as it relates to what you were expecting in March?
Like, I'm not deaf, right? Like, this dude pretty much just said, like, hey, we're going to raise it at least in total another 50 basis points before the end of the year, right? Like, I'm not crazy, right? And everybody keeps saying, oh, a soft landing. Ooh, what's the housing market going to do? It's like, dude, he's not even done with the carnage. Like, it's not even, it hasn't.
In a way, a strong labor market.
He's just stopping for one meeting. That's it.
Could aid that along. It could aid that along. But I guess I want to come back to the main thing, which is, though, simply this. We see the committee, as you can see from the SEP, the committee is completely unified in the need to get inflation down to 2%, and we'll do whatever it takes to get it down to 2% over time. That is our plan. And we understand.
And if that means people are going to lose their jobs and interest rates for houses are going to go up to 7 or 8 or 9%, then fucking so be it.
Of today's workers and families and businesses, but also for the future. Getting price stability back and restored will benefit generations of people as long as it's sustained, and it really is the bedrock of the economy, and you should understand that that is our top priority.
Just a quick follow-up on that. I'm just a little confused because you said the committee will do whatever it takes to get inflation down over time, but when I look at the SEP, inflation is still projected to be elevated next year, but the Fed funds rate is lower than where it is now. Can you help me understand that?
Sure, so.
That means it's not going to happen immediately, you dumb shit. What the hell is wrong with you? It's going to take like 5 years.
Wait on forecasts even.
Oh my God, man. Are these like, do these people just think that like, oh, okay, let's just get it down to 2% next month? Like, what?
If you don't lower interest rates, then real rates are actually going up. Right?
Come on, lady. What are you doing over there?
A real rate, the nominal rate at that point, 2 years out, let's say, should come down just to maintain real rates. And actually, since we're probably going to, we're having real rates that are going to have to be meaningfully positive and significantly so for us to get inflation down, that probably means that certainly means that it will be appropriate to cut rates at such time as inflation is coming down really significantly. And again, we're talking about a couple years out. I think as anyone can
a couple years out. He literally just said, hey, guess what? We're not cutting any rates for like a couple years out. That's like at least 3 years for the Fed.
Inflation has not really moved down. It has not
moved down
to our existing rate hikes. And so we're going to have to keep at it.
Julie.
That's super bearish, what he just said.
Sorry, thank you. Hi, Chairman. Julie Chamanas, AFP News Agency. The May job report showed a rebound in May in black workers' unemployment. Is it consistent with the Fed's maximum employment mandate? Are you worried about that, about this rebound?
So we are, of course, worried about there are
long-standing
differences in racial and ethnic groups across our labor market. That's a factor that we can't really address with our tools, but we do consider that when we're thinking about what constitutes maximum employment. It is for us a broad and inclusive goal, and so we do watch that. But remember,
they always go for that word inclusive.
Including black unemployment has been bouncing around right near historic lows, historic modern lows here. So we're still talking about, what is as strong a labor market as we've seen in, a half century here in the United States. So overall unemployment of 3.7% is 3 times higher than
fucking unheard of. That's what it is.
A month ago, but still it's extraordinarily low. And so it's a very, very.
In other words, people need to lose jobs.
Megan.
Higher.
Thank you. I want to follow up first a little bit just on the rent question on housing. We heard Governor Waller talk about how.
Oh my God, with the housing
We
questions.
haven't quite seen the slowdown in rents show up in CPI yet, and we did hear Governor Waller talk about how an uptick in housing might mean that there's not going to be as much relief coming or a shorter bit of relief than we thought. Can you talk about how you're thinking about that and how that played into today's?
Oh, trust me, there's going to be relief once he starts getting interest rates up to 6%. Like real Fed funds rates up to like 6.5%.
In terms of their increases, because we went.
Oh yeah.
We went.
You'll see mortgages at 7.25% minimum. And that, that's what he's waiting for, I think.
About half of that for the PCE. So it's important. And so it's something that we're watching very carefully. It's part of the overall picture. I wouldn't say it's the decisive part, but take a step back. What you see is look at core inflation over the past 6 months, year. You're just not seeing a lot of progress, not the kind of progress we want to see. And it's hard to avoid that. And the committee, people in the committee, the median went up significantly, so that the median participant now thinks that core PCE inflation on a 12-month basis will be 3.9% this year. So once again, for the past
that's not that bad
over the course of the year, and that's doing that again. So we see that, we see that inflation forecasts are coming in low again, and we see that tells us that we need to do more. And so that's why you see the SEP with where it is.
Could you also talk briefly about your outlook for wages, and given the recent slowdown in core services excluding housing, how far you think wages might need to fall in order to get inflation back in line?
So wages will continue to increase. So what we're talking about is having wage increases still at a very strong level, but at a level that's consistent with 2% inflation over time. And so I think we've seen some progress. All of the major measures of wages have moved down from extremely elevated, not extremely, but highly elevated levels a year or so ago, and they're moving back down, but quite gradually. And we would want to see that process continue gradually. Of course, it's great to see wage increases, particularly for people at the lower end of the income spectrum. But we want that as part of the process of getting inflation back down to 2%, which benefits everyone. I mean, inflation hurts those same people more than anyone else. People on a fixed income are hurt the worst and the fastest by high inflation.
Greg. Thank you so much, Chair Powell. Greg Robb from MarketWatch. I just wondered if the committee has talked at all about the labor market, and there's strikes now in Hollywood, and now the United Auto Workers are talking about a possible strike. I mean, aren't workers, we have some workers have power now and are going to be seeking higher wages. Does that come up in your discussions? Thanks.
So
Yeah, because wages aren't keeping up with inflation.
And dynamics in the labor market.
Everyone's going broke.
It is about as central a topic to our discussions as anything. I mean, it's very, labor economics, and the labor market are utterly central. It's half of our mandate. So we spend a lot of time talking about that. I think, there are structural issues that are really not for the Fed. And so we don't spend a lot of time, although we take notice of what's going on, but we're not involved in discussions or debates over strikes and things like that. But we look and we see what's going on, and we're making judgments about what it will take to get inflation down to 2% in the aggregate. And as I said,
in other words, bro, we don't care. Like, that's up to the businesses and the unions. We don't give a shit
about that as we get into really service sector inflation, which is the part of the economy where we have seen the least progress.
Let's go to Mark for the last question.
Make it a good one, buddy.
Chairman Mark Hamrick with Bankrate. Wondering what your thoughts are now about systemic risk, now that we're about 3 months past the failure of Silicon Valley Bank, and also specifically, what are the risks associated with commercial real estate as well as non-bank financials?
Nice. Finally, someone asked the question, how bad is this going to fuck commercial real estate? That's the big question.
So,
because if that bubble pops, the entire real estate bubble pops.
With commercial real estate. We, of course, were watching that situation very carefully. There's a substantial amount of commercial real estate in the banking system. A large part of it is in smaller banks. It's well distributed. To the extent it's well distributed, then the system could take losses. We do expect that there'll be losses. But there'll be banks that have concentrations, and those banks will experience larger losses. So we're well aware of that. We're monitoring.
Holy shit!
It feels like something that will be around for some time, as opposed to something that will suddenly hit and work its way into systemic risk. In terms of non-bank financial sector. There's been a ton of work, and clearly in the pandemic, it really was the non-bank financial sector where issues really arose, and there's a lot of work going on with the administration, in particular, leading that to try to address issues in the Treasury market and in all kinds of areas in the non-bank financial market. But our jurisdiction at the Fed is over banks, actually bank holding companies and some banks. So that's really our main focus. In terms of the events of March, as I mentioned earlier, we will be carefully monitoring that situation. Our job generally involves worrying about a lot of things. that may go wrong, and that would include the banks. It might be hard for me to identify something that we don't worry about rather than that we do worry about.
Yeah, that's
So
true.
we're watching those things very carefully. And as we see things unfold, as we see what's happening with credit conditions and also all the individual banks that are out there, we'll be able to take, to the extent it's appropriate, we can take, if there are macroeconomic implications, we can take that into account in our rate setting. And so I guess that's what I would say.
Can I just follow up on the last part? That's, do you risk further exacerbating those issues if you get up to another 50 basis points?
So that's, and I guess I meant to address that by saying, as we watch, we'll see what's happening, and if we're seeing the kind of tightening of conditions that you could be referring to, then we can factor that, because really we use our rate tool it really has macroeconomic purposes, so we'll take that into account. Of course, we have responsibility for financial stability as well, and that also is a factor that we're always going to be considering. Thank you very much.
All right, so that's that. I'm not going to end the stream yet. I want to give you guys some thoughts and then some closing words, and then we'll go ahead and move on here. So the first thing that I want to talk about is the actual rate. So right now, if you go on redfin.com and just go to mortgages and say compare rates, this is what comes up. I live in Kansas City. A home price for me that I would probably want is about, $450,000. Let's say you've got a low ass down payment, right? Like you've only got like $20,000 to put down because you haven't saved everything up. First Citizens Bank is on here. That really cracks me up. You're looking at 6.2. And then I've never heard of NBKC. Obviously, that's a Kansas City bank, but I've never heard of this. That's probably cheaper because it's a local bank here. And like if I go through my credit union, I can get them as low as under 6. So yeah, through like big banks, it's looking like it's probably 6.2 or so for most of them. Let's just not list a city, right? Can we do that? Is it gonna let me if I just like refresh this page? No, it's like filling it in for me. Well, anyway, okay. So here's another one, Embrace Homes, whatever that is. Fucking, these are like third-party lenders, right? Just like smaller lenders that just do bank mortgages or whatever for housing. 6.5 is insane. So if it's already like that now, and a lot of these third-party lenders are only just catching up to what the rate hikes have already done over the last year, and he's still saying, hey, we've got a lot more to go, and chances are we're going to be doing another 50 basis points before the end of the year. That means that over the course of this year and next year, that's when you would really, really start seeing housing and rent. You'd probably still see rent going up because all the renters for apartment buildings would be taking advantage of it. But you would see a severe decline in new homes built and demand for new homes. Just because the interest rates are so high. Now, I've been saying for the last 4 years, I want to wait until the interest rates are, until I'm buying a house at 6, 7, 8% on purpose, so that I can live in the house for 10 years. When the rates go back down in another 10 or 15, I can refinance it at like 2 or 3. When we see another one of those cycles where they're just printing money, that's when you go and refinance it for like half the percentage and you just pay off the house. That's pretty much what I'm planning on doing for like family goals, right? Like I want to see those rates high. I want them to go higher. People need to, I do agree with him that, labor market conditions have to tighten, right? Like we got 3.7% unemployment. This administration just added another 200,000. They've been adding 250,000 jobs to the jobs markets in the countries for every quarter for the last year. So in the last year, they've added about 1 million plus jobs. And unemployment is still like at record lows, 3.7%. I think the last time that we were at, I don't know, is there like a chart on TradingView for this? Can I like actually just search unemployment? Unemployment level. Okay, sure. Why not? There it is. Boom. Here it is on a chart. It's a line chart. All right. Obviously, as population grows, right? Like it can't be, it should probably be like percentage, right? We should probably keep it as percentage. Yeah. So actually, no, that's not going to work. So when's the lowest that we've been here? We've been here in that was like before the COVID. This was COVID. What was this? So this was the last housing market bubble burst, right? Like we haven't even started to see unemployment like really go up like at all here. Yeah, see the percent is like really skewed because I know that we didn't have like 100% unemployment, right? Like I got to find a better chart for this. But anyway, this was the housing bubble burst up here, right? Like this is what, right here. We got to, here we've been below that. So I don't know. The unemployment level kind of needs to start really ticking up here. We haven't really had one for quite some time. This is an anomaly. This is like a pandemic. We haven't had like a natural one of these for a while. And we're just kind of like sitting in this kind of a situation where we're going to do one of these and start seeing unemployment go up. That's what really needs to happen. I can't really blame him for that either. Just cause I mean, it has to happen. You can't sit down and, under 4% unemployment for like long periods of time. Like your economy is not going to function if you do that. Because demand just stays so elevated. It doesn't matter if wages are keeping up. It doesn't matter if wages are keeping up with inflation at that point, because you've got so many jobs and not enough people to fill them, and so many people with money that they're just spending like crazy and everything's out of balance. That's what we're still experiencing now. Everyone's asking questions about the housing market. Not really too many people seem to be too concerned with the unemployment, even in light of all of the layoffs that we've had in the past like 6 months to a year. There's been quite a lot of layoffs that have been going on. And I mean, like our nation pretty much isn't even fucking flinching. Everybody has work. And if they get fired from a job, they're immediately going to another one. Unemployment claims are super low. I think we get numbers on that tomorrow. I mentioned that at the beginning of the stream. So jobless claims, you know what I mean? Ongoing and initial jobless claims. That's what we're going to see. Yeah, sure. We're probably going to see an uptick in those, but that's what needs to happen. I think that they probably need to get unemployment up to, a good 4.5%, 5% before we start seeing some real change in consumer goods demand, like retail stuff and food and things like that. And unfortunately, people just got to be out of work. Some people need to capitulate. Most of the financially irresponsible people that were like spending well beyond their means. I think we have something like credit card debt at an all-time high. I honestly think that the Fed is only pausing here simply to give lenders and stuff some time to recuperate funds and be putting people in for collections on those overspent credit card accounts and closing out lines of credits for people, because credit card debt is at an all-time high in this country. It is like absolutely ridiculous. The number on it is huge. Everybody's been living beyond their means for the last 3, 4, 5 years. And the rates are getting so high, and the Fed is signaling like, hey, we're going to pause here for a month or two. But we're going to do another 50 before the end of the year. Like kind of like signaling to the banks like, hey, get your shit in order, because guess what? It's coming. And like giving them a freebie in some time to prepare and get ready for the incoming very, very, very severe credit crunch that's going to happen, no one's going to be taking mortgages out because the rates are too high. Everybody that has lived for the last 15 years and has been, like watching what's been happening with the rate, nobody wants to buy a house that's like over a 4.5% interest rate. Like most people don't. I do, but most people don't, especially like investors and stuff that buy up like a lot of properties and stuff. They just don't want to do that. It's not cost effective for them. The demand for mortgages is probably going to be on the decrease. Unemployment's going to start going up. And that means that people that are already in debt aren't going to have a way to pay those debts, like on their credit cards and shit. That's what I think is really going to end up being part of the bubble that bursting. It's just going to be a credit bubble that bursts. It's not necessarily a bank system failure or real estate, sector failure or like a housing market bubble. That's not what it's going to be. This time it's just going to be straight up credit, all of the credit cards, mortgages, and it's also going to be corporate real estate, like commercial real estate and shit. Everyone works remotely pretty much for now. Like that's like the new norm. Like if you're working in tech or you work at a call center, like there's like a million jobs. You can pretty much do everything from your house unless you have a physical job that you have to go to because you're a truck driver or you're a delivery person or you're a cabbie or, like you work in a restaurant or you're a bartender or whatever, you have to physically go somewhere to do physical work. Everybody else that's working in any other industry, even if it's sales or telemarketing or whatever you work in. Like I work from home, right? Like I trade and I post content and I do social media and I do freelance work and I'm going to school remotely for my certs in IT, which is for the most part probably going to be remotely too. That's kind of like the new norm now. Like we've entered into a digital age. Everything can be done remotely. Big companies don't need the big office buildings anymore. They just don't. And they don't have anybody in them. They're empty. So if nobody's going to want real estate, well, now the people that own those big ass buildings are really in some big trouble because no one wants to buy them to convert them into apartment buildings. Nobody wants to buy them to convert them into condos. They're just empty. That's really bad. That's kind of what happened in China. Okay, right? Remember, they had all of those humongous buildings that they were building for people to live in, and then their housing market crashed and all those buildings were empty. They literally just demolished them. Like that was it. They just demolished them. So that's pretty interesting. I think that's going to be the real big one. But what really if you're looking to buy a house like I am, like soon, like within the next couple of years, as this bottoming of the housing market is kind of like happening, you're just going to have to face the fact that when housing is really cheap and it's not expensive to be buying up houses, is when the interest rates are really high, right? So you just saw with the best credit that you could possibly have, like an 850 or an 800 credit score or whatever, already some of those rates are up to 6.5% through third-party lenders. Like I don't even have perfect credit, right? I've got like a 720. So even if I went to Navy Fed, who's advertising 5.9, with a smaller down payment than whatever that rate is based off of, there's no way I'm getting 5.9. I'm probably getting 6.2 or 6.3, right? But if I went to one of those other third-party lenders, I'd be getting like 7. It would be like really bad. So, if that's going to keep going up, that's unfortunately something that you're going to have to deal with. Make sure obviously that you can afford it. And then when the time comes, if you can afford it with an interest rate that high, the time will come and you will be rewarded 4 or 5 years down the road after you and your family are happily living in a nice house that you bought and you saved up money for, and you weren't in any credit card debt. Your debt to income ratio was awesome. You and your wife have no debt to your names and your debt to income is fantastic. You've both got good scores. You buy a house, it's expensive, whatever, you can afford it. The interest rate's high. It is what it is. You will be rewarded because 5 years down the road or 7 years or whatever down the road, normally it's about 7. you will be rewarded and you will be able to refinance that house for like half. Like the interest rates are never going to just stay at 7-8% of like where you bought the house. Like eventually the Fed, just like he said, oh, well, you know, it'll be a couple years before we even consider easing, right? And cutting rates. He literally said that, if you were listening to when he was answering questions for the presser, he said it would be at least a couple years before any kind of cutting. That's very important to know, because that means that within the next year or 2 or 3, give or take, okay, that's the bottom of the housing market. Like in terms of like the worst possible time to be buying a house, when rates are just absolutely high. And I know I'm going to get flamed for this. I know I can see people leaving the stream as I'm saying this. I'm not saying this as financial advice. What I'm saying is that I have seen it happen and I have seen that work, because my parents are boomers and that is exactly what they did. They bought a house. They moved down to Virginia from New York when I wasn't even born yet, in 1984 or 6 or something. And the markets were not good. If you look at a chart back in the 80s, it was shit. It was god awful. Housing rates were through the roof. I think they purchased a house for something like $175,000 or $200,000, which at the time was like, it got you a really nice house. Like I grew up in a pretty nice house, suburb neighborhood, right? And I think they bought it at, I think my dad told me, what was it? Like 9.5% interest rate, or like 9.25%. It was over 9% that he bought the house at. Well, when I was the age that I was either going to be going into the workforce or going off to college, my parents sold that house, right? It was like in the 2000s and it was at the height of the market, right? Like going into right before the economy crashed, 2006, the economy started tanking and the things flipped over in 2007, 2008. He bought it when the interest rates were super, super low. And then by the time I was like, I think 10 or 12, he had paid the house off because the interest rates had come down so far in like 10, 15 years of living there that it was like, okay, fuck it, whatever. I'm just going to refinance it. And he cut the financing in half. He originally had it for like over 9%. And then when he refinanced it, I think it was like 4.25%, 4.5%, like a lot lower. Like he basically cut it in half. Paid off the house by the time it was, that was it. So I've seen the strategy work. I've watched my parents do this strategy all through while I was growing up. I've watched them do this with the house that I grew up in. And by the way, when they sold that house for $750,000, by the way. They bought it for like 200 and they sold it for like 780. So just absolute monster of a win for my parents. I plan on doing the exact same thing. If I am going to get a chance to buy a house when interest rates are that high again, yeah, I'm going to do the same thing my dad did. I watched him do it. I watched him be very successful with it. I 100% would do that. I would buy a house at 7-8% interest rates because the house is going to be cheap. I'm still going to, if I'm buying it, obviously that means I can afford it. And that means that 5-10 years down the road of raising my daughter in a really nice house and going to a nice school, and we can afford everything. And the economy the whole time is getting better and getting better and getting better. And wages are normalizing because food and everything starts moderating. Everything, starts kind of moderating a little bit over time. And then next thing you know, if my daughter's going off to college, it's like, okay, by that time, it's like, okay, fuck it, retire, sell the house for, probably at least a 40% profit minimum. And I've probably already refinanced it before then for like not 8%. And I probably cut my interest rate in half or less. So this is for if you need a house to live in, right? I don't want to be living in 2 and 3 bedroom apartments for the rest of my life. It sucks. I don't like apartments anymore. I'm over it. I'm like in my 30s. It's time to just like say fuck it and get a house. So that's pretty much what my plan is. feel free to flame me in the comments and be like, Cobra, you're a fucking idiot. Why in the world would you ever buy a house at an 8% interest rate? Well, I stated my case. It's like the guy sitting at the desk, right? Like, I would gladly buy a house at 8% interest, change my mind, right? All right, well, I mean, that's pretty much it. There's not really too much else to go over. If there is stuff that you guys want me to go over, or if you guys have questions about something, let me know real quick in the chat and I will get to those. But unless there's any questions, I think I'm probably going to call it. What do you guys think? So McShiverson says possible UPS strike in August. Is that really a thing? Huh. Great stream. Thanks for all the insight. Riley, you are very welcome. Anytime. All right, well, just some closing words then. If you guys don't have like chart requests or anything like that, that's cool. I really don't want to get into that. I have a meeting in 20 minutes. I just want to get up, stretch my legs, drink some water, make sure my daughter's good, and get into my meeting here shortly. But just some closing thoughts. I'll switch full screen here. I really appreciate doing the stream with you guys, so thank you for tuning in. That's why I do these things. It makes it worth it for me to actually do this for you when people actually show up. I've been doing them pretty regularly now, but nobody really used to watch them. I used to just like record them. So now that I got people actually showing up for them, I really appreciate that. So I'll continue to do them and stuff. Let me know in the comments below. I was actually also thinking about, since I've got a lot of things going on, I wanted to see if it was worth it for me to actually recreate my own Discord. A while back, I had my own. And then I had merged with Elevate. That didn't really end up working out. And I just didn't restart anything after that because I was like with them for so long and I was their web designer and yeah, I still kind of am and do a lot of their stuff for them as freelance. But I kind of gave up my group to join theirs and I kind of regret doing that because I had a really close, tight-knit community of my own peeps. And we would trade every day and go over, I had all private education for pay in there, like actual courses and stuff. And everything else is like free. Like I would just post my setups and all of that stuff. So I was thinking about doing that again, but I only want to do it if it would be like worth it, like there's going to be like a few hundred people in there, not like 5 people or 10 people in there. That just doesn't make sense. I'd rather do it if there's going to be like, a few hundred people in there. That makes it worth it for, the amount of people that are getting the information. Let me know in the comments below what you think on that. A lot of people said that I should do it again. I've already taken a poll on Twitter on this exact thing. Like, hey, should I start the Cobra Trading Den again and make my own Discord group since it didn't really work out with Elevate and I'm not there anymore? Most people said yes, so it's something that I'm highly considering. I'd like to hear from you guys because you guys are the ones that actually engage with the streams and stuff like that. It would likely be free, and then there would be like premium stuff or what. There would be premium stuff in there that I'm not just going to give you. Plus, it would kind of be a home for like all of my Venom algo stuff to live. It would just be so much easier to like make updates for people that are just specifically there for that, because Twitter kind of sucks. And the Venom algo Twitter, I appreciate it if you follow it. I put a lot of work into that Twitter, and it doesn't get very much attention, which is kind of disappointing. But show the Venom algo Twitter some love. I appreciate that, by the way. Shameless plug. If you guys want more information on like what is that? What is Venom? Check out all the links in the description below. Make sure that you tap that like and subscribe button while you guys are down there. For those of you guys that are newer viewers, I really appreciate that. I'm going to do a video tomorrow, just kind of a post FOMC wrap up to kind of summarize all this stuff. So if you're just getting in, or if you didn't get in when it started, that's cool. Don't worry about it. I'm going to do one of my short Bitcoin analysis videos tomorrow. That'll be posted to Twitter. If you like and subscribe to the YouTube, you'll just get notifications here because I also upload those to YouTube, but I upload them on Twitter and all the social media things. Twitter sucks most of the time. Yeah, it really does. It's a good hub for some information, but the pain in the ass thing is that you have to sift through all of it. And then you don't like, it's hard to decipher, like for a lot of people, sometimes for me too, is like, what's misinformation, what's fact, what's based on fact, what's an opinion piece, what's just straight trolling. It's just a pain in the ass. Like it's like extra work that I mentally have to do to get information. So I think maybe just doing a Discord would be a little easier, get a more close-knit community there. Those of you that want to learn, or, you know, like private mentorship and stuff like that, that's always available too. I still do that. But anyway, with the Venom stuff, cobra-trading.com, tons of helpful links down there too, like all those high block capital charts. And, you know, like if you're looking at using the Venom algo, but oh shit, like, you know, we can't just use some of these exchanges like Bybit anymore because they're all KYC. I also have a link down there for a VPN. It's the same one I've been using for literally, I don't know, 10 years. Even without trading, like you should have one anyway, right? Like it's security. Like your ISP shouldn't be like, you shouldn't be allowing other people to track what you do on the internet, I guess is what I'm saying. That's like weird. Like, cause that goes for everything. Like not just the porn that you plebes are jerking off to. Like I'm talking like your banking stuff, you know? So, yeah, you should probably have one of those anyway. But anyway, tons of helpful stuff down there. Make sure that you guys check all that out. I appreciate all of you guys joining. I hope you have a wonderful rest of your day. I'm going to let you guys go. Look for that video tomorrow, and then join me for Beers and Bitcoin on Friday at 9 p.m. Eastern, 8 p.m. Central. And until then, happy trading.